They say money can't buy happiness, and that is true. Real happiness comes from within when you begin to understand who you truly are. But it is also true that reaching that inner peace is hard when you are constantly stressed about bills or survival. That's where money plays a role. It gives you the freedom, time, and space to focus on what truly matters. For me, that is what investing has taught me. Being an investor is a lifelong journey. You experience the highs when your investment go up and the lows when they fall. But over time, you learn that both the joy and the pain are temporary. What lasts in the mindset? Discipline, patience, and emotional control. Investing isn't just about building wealth, it's about becoming a better version of yourself. And that's why I say money may not buy happiness, but used wisely, it can help you build a life that leads to it. Hey everyone, my name is Ricky and welcome to Peaceful Investor. This channel is about simplifying investing and achieving financial freedom. Before I go further, I'm not a financial advisor and this content is only for educational purpose. On this channel, I focus on breaking down businesses in the simplest way possible. I try to explain everything in clear, everyday language. So even someone who is brand new to investing can understand what the company does, how it makes money, and whether it's worth looking into. I really admire Peter Lynch for this exact reason. He once said, if you can't explain a company to a 10 years old in under 2 minutes, you probably should not own it. That quote stuck with me. And that is the mindset I bring to every company I research. When I explain a business, I look at its fundamentals, past performance, future goals, quarterly earnings, and any news that might affect me as an investor. I also make it clear whether I own that stock or not because I believe the only way to build real trust with my viewers is by being honest, keeping it real and staying true to who I am when I buy a business. I always buy it for long term, not for quick gains. I follow it closely over time. If the fundamentals stay strong, I stay invested. If they deteriorate, I reduce or exit. I also trim positions when the stock becomes too expensive or if I foresee a short-term pullback. Sometimes I just take profit or build a cash reserve so I'm ready for better opportunities or market depths worth buying into. And speaking of opportunities, one company I have been watching closely and that I believe still has a strong long-term potential is Pinterest. So now let's talk about Pinterest. Pinterest is a visual discovery platform where users came to find and save ideas like recipes, outfits, home decor, or fitness plans. The company makes most of its money through advertising. Business pay Pinterest to show their products as sponsored pins, which appears naturally in users' feeds. Which makes Pinterest special is that users often come with intent, they are planning something, so they are more likely to click or buy. That high intent makes Pinterest a valuable space for advertisers. The platform is also adding shopping features so users can discover and buy products more easily. In short, Pinterest turns inspiration into action and that's how it gets paid. Now let's deep dive into the fundamentals of Pinterest. They posted their Q2 2025 earnings almost 2 months ago and the numbers show a strong recovery. Revenue came in at 998 million, up 17% year over year. If we look at Pinterest track record, revenue growth has been very consistent. About 21%, 18%, 18%, 16 and 17 this quarter again. That tells us the business is able to sustain healthy double-digit growth over multiple years, not just a 1 month spike. If you zoom in quarter on quarter, revenue dipped a little in Q1 compared to Q4, but Q2 showed a clear bounce back with strong momentum. Breaking it down by region, US and Canada grew 11%, Europe surged 34%, and rest of the world exploded 65%. Monthly active users or MAUs climbed to 578 million, up 11%. MAUs simply means how many people open and use Pinterest at least once a month. So the higher this number, the bigger the audience advertisers can reach. For context, that is more than population of entire European Union logging in monthly. On the top of user growth, Pinterest is also making more money from each user. APRU, average revenue per user, grew 6% globally to $1.74. In the US and Canada, APRU was 7.29, in Europe 1.30, and in the rest of the world 0.19. The US leads in monetization because advertisers there spend heavily, but the real story is the growth rates. Europe up 26% and the rest of the world up 44%. Even though these dollar numbers are smaller, the percentage growth shows international users are becoming much more valuable to Pinterest over time. Profitability also improved strongly. Adjusted EBITDA came in at 250.8 million, up 33% year over year, with margins expanding to 29% on a trailing 12 months basis. Pinterest generated over 1.1 billion of EBITDA at the same margin. Free cash flow was 196.7 million in Q2, and the cash conversion is very healthy at 92% of EBITDA. This is real money the company can reinvest into growth, buy back shares, or strengthen its balance sheet. Risks remains with the higher spending in R&D and marketing, and stock-based compensation of 821 million over the past year, which can dilute shareholders. To put this in perspective, that's roughly 20% of Pinterest annual revenue and about 72% of trailing EBITDA. So it's a very big number. Now, to be fair, stock-based compensation is common in tech companies because it helps attract and retain top talent. In the short term, it can look high, but if Pinterest keeps growing revenue and cash flow, this dilution becomes less of a concern as the business value expands. And from a personal view as an investor, I would like to say I hold a position in Pinterest and I genuinely enjoy following this business. As of today, the stock trades around $31.90 with a trailing PE of 11.6 times and forward PE of almost 16 times. That looks like a reasonable, even attractive valuation if international growth continues. For me, this is a good buy here. But remember, just because I'm buying doesn't mean you should too. Always do your own research, check your goals and risk tolerance, and only invest if you are confident. Thanks for watching and don't forget to subscribe to Peaceful Investor for more updates. Thank you.